Disclaimer. Trading financial instruments carries risk. This material does not contain investment advice, nor should it be viewed as a personal recommendation, or an offer of, or solicitation to trade in financial instruments. Past performance is not a guide to future results.
Hello everyone and welcome to a new video report ATFX. My name is Gonzalo and I'm doing this video to give you a quick fresh update about Nike. Just before the presentations of the corporative results, we're gonna review the company. We're gonna go into details in terms of, for example, checking the balance of the company, the debt, liabilities, assets, and also at the end of the video, as always, I'm gonna give to you a clear, super clear chart to see what is the main price levels in order to follow what is the situation of the company. Let's go to the screen, let's go to the presentation, and let's go just to start and see in detail this. Q4 2025 earning preview. As you know, most of the time the companies are just follow a calendar, a different calendar based on the fiscal year, which means like not always need to be exactly synchronized with the current calendar of the days. But the most important thing, let me set the whole screen for you so you can see in detail. But Nike fiscal Q4 is the most important quarter due to the holiday sales and guidance for the company coming year. Analysts expect Q4 revenue to rise 4% year to year to 12.25 billion and EPS to increase 11% to 73 cents per share. The stock is down over 30% so far this year. We're gonna see that in a few minutes on the chart. Expectations are for rebound if guidance adjust recession fears. There is many different factors we need to take in consideration, not just the global situation of the market, which is not the best considering the annual elections, United States elections, even in Europe, really tough elections. So the market is discounting right now certain volatility, especially on the European markets. And in this case, we also need to take in consideration this summer and the expectations based on the summer, which is the 2024 Summer Olympics. Nike is betting on the 2024 Summer Olympics in Paris to help turn around its slumps in sales. So they need to improve, or they want to improve. Yes, has a kind of introduction of what we're gonna see in a minute. But you need to take in consideration that comparing other companies related with the sport industry, Nike is the top number one in terms of market capitalization. We're gonna check in a few minutes the benchmark. We're gonna see also what are the main competitors of Nike and what is the market capitalization of those competitors, just to get an idea of what is the size of this company compared with others. The company is hoping that the global event will boost demand for its athletic apparel footwear, leading to increased revenue. And as we usually expect in this situation, they probably gonna sponsorize most of the events, workshops related with this during the global Olympic Games in Paris this summer. Now, market capitalization, as you can see, I just mentioned here, this is a market leader. It's one of the world's largest sport firms in terms of stock market capitalization. Full screen so you can see in detail all numbers. But yes, let me see if I can highlight here the few points. We got Nike right there, and we got a capitalization of 146 million of dollars. And upside we can see also fair value 86.74. What that means, it means like it's the top number one in the sport industry, especially for sport shoes trainers. But it's also true that the market is estimating based on these values taken from valueinvesting.io that is overbought and the fair value probably is below the current levels. That's why the market is not moving up so far, and we can see the estimation is 10.8% over the value, the current value of the company. And that's in relation with the value, with the position on the market, the EPS 3.5%, also the ratio between dividend plus the price of the divided by the price of the company is not one of the most attractive ones. But let me remove the, yes, I think I need to just change the mouse here. We talk about this event on Summer 2024. Let's talk also about the competition and talent lost, because Nike is facing a stiff competition from brands like On Holding, AG, Deckers Outdoor Corps, Oka, on Adidas AG. The company is also struggling with the loss of talent, employees who had a strong institution knowledge, and this has the lead to increase discount and push models, which has never negatively impact the sales. So the main concern of the company right now is keep or maintain the sales level they got in past times, which probably is more related with commercial agreements with top stars in the world sport. So just taking influencers and get new agreements with the trending ones. Potential for rebound and a strong brand. Let's go to the whole screen so you could see in details. Despite the current challenge, Nike is still a strong brand with a loyal customer base. If the company can successfully navigate to the current headwinds and deliver positive guidance for the coming year, there is a potential for significant rebound on the stock price. Blah, 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 blah. Why I'm saying blah, blah? Because obviously this is what we can expect from a company. Obviously the company is going to tell us that the future that is coming is a golden future and there's many things to do, but we only know if this is true or not when we will see the chart and the projection of the price. Cons of investing in a high stock price and competition. This is the problem. We mentioned the ratio between dividends and the price, the overvaluation of the company, but here, despite the YTD decline, some analysts believe that Nike stock is still, even with that drop of 10%, the drop that we were mentioned on the previous slides right here, 10.8% overvaluated. So even with the drop, and also the drop with registry, what it was, the drop of the year, 11%. No, it was the rise 4%. Increase 11% to this, but expectation rebound of recession fears. The drop that is facing so far, which is here. So we have seen more than 10% of drop since 2024, starting from $120 per share, and it's dropping to 96 right now. But regardless that, so despite the YTD decline, some analysts believe that Nike stock is still too expensive. The company is also facing intense competition, which could continue to put pressure on sales and earnings. Additionally, the loss of talents employed could continue to impact the company's operation and performance. We mentioned this already, how many other companies are growing faster than them, setting the bar low. Why? Because the expectations are, let's say the results, the EPS presented by the company is better than the expectations, but if you can take a look here, the expectations are dropping. You can see that the expectations are moving lower. In this case, little bit, slightly higher, but if you take 2024 to 2025, for example, it's almost flat. Boom, boom. So therefore, we don't see any progression here. Even if the case is the company is doing so well and they improving or beating the expectations, it doesn't matter if you present a result or EPS higher than expected, if the expectation is already flat and your EPS is, for example, from Q2 2024 to Q3 2024 is a drop, as you can see, better than expected, but still in a drop. And therefore, while EPS is expected to improve in Nike's fiscal Q4 2025 earnings report, it's important to note that these expectations have been revised downward from previous estimations. So again, they are taking so low the expectation. Balanced approach to finance. We're gonna see also the debt ratio. We're gonna also take a look on the balance sheet. So we're gonna see the liabilities, assets, and we're gonna compare long term with short term to give you absolutely 360 degrees view on this value, on this stock, before we go to the chart. This company maintains a modern level of finance leverage, a strict imbalance between debt and equity finance. The approach helps mitigate risk while still allowing for growth opportunities. So it is good. As you can see, it's one of the lowest leverage on the industry. I don't know, you take Puma, for example, is 0.27. Good, but still higher than the one on Nike. And if we follow other competitors, like, for example, Phoenix Footwear Group, it's 22.6, which is super high leverage, which means the risk of this company to suffer a default, let's say because they're running out of cash, at certain period. If the sales drop, for example, there is no assets to hold the company in middle or long term, and that's important. In more details, you can see here the balance sheet, so you can see also the long-term assets, which is 7,000.9 millions. Total assets 37.4 thousand millions, and in terms of current assets, long-term assets, 24,000. So comparing with the liabilities, it is true that the ratio is still good, 24,000 or about 9,000 on short-term liabilities, and in long-term we got 37, 7.9 in relation with 23,000. So with total assets we got 37,000 versus 23,000, which is giving us the view of the low leverage for the company, especially in short term, seems to be good in liquidity, and therefore low risk for any potential event or situations. Let me see if I can zoom this chart so you will see in detail all the prices. Amazing, I can do it. So let's go to full screen, and this is the end. As you can see, I just highlight here the levels, the price levels reached on 2018 and 2020. We got that drop that it was actually the base or the supports achieved on 2018 as a resistance, and we also got $80 more or less as a kind of important level support during 2019 to 2020. That's why I believe that in long term, since January 2021 or 2021, which it was the last really or truly strong bullish market we have seen. Since then, obviously in this case, in this situation, the market is completely below those levels, and therefore it's indicating us a clear downtrend on this asset, on this stock. And that's why I believe it's not a company attractive. Let's see what happens after the post results. But even if it's rising the company to $100, $110, still there is a big chance that the company keep going lower and lower until at least it's meeting the support levels, which is $80 per share from 96. The current levels is not too far, and therefore we probably gonna test these levels of support before any big hands or big funds will take a position in this market. And as you know already, if you have been following my videos, I'm trying to give you always the perspective of the big hands in the market, of the institutional traders who are taking positions in equity markets like this, for example, only in certain levels and in certain periods. If you're trading this asset on day trading, you're gonna see a lot of noise. If you trade this asset in long term, you're gonna find really attractive prices in certain timing, which is $80, even $68, $75, $68, $65. That's the two levels for entries probably, and I just give you $80, $68 as the probably long. So long-term bearish holding, declining heights well identified, medium-term bearish, targets 80, 68 has a support for new entries, long entries on this asset. Well, that's all. I hope you enjoy this video, and remember, if you like this content and if you enjoy the video, please give me a thumb up and subscribe the channel to follow new more content. Take care. Bye bye.